Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. Hey, for those of you that are new, welcome aboard. Make sure you continue to hit that like button. If I say anything that you do like and you are new and you have not subscribed, then take that opportunity to subscribe. Make sure that notification bell is hit to all. Do not fall for spam in the comment section. I don't have WhatsApp, Telegram, none of that. Don't manage anybody's money. Let's get right into it. Let's see what's going on in the market. And then I'm going to talk about another play that I have my eye on for the stock and an option. So it's one of the ones that I called in the last 7 plays, all right, the last 2 weeks. Right. So the Dow fell 213 points. We don't know where it's going to be by closing bell. Chipotle slid 5%, missing on its expectations, right? It tumbled. And then Lumen Technology tumbled 21.3% after it reported. That's what's going on. Meanwhile, check this out. This is what you and I consume every day. CVS and Uber each gained more than 4% on the back of their earnings. Right. For the first quarter of 2023, 42 companies in the S&P 500 has issued negative earning guidance, right? So here we go. I don't know why it doesn't act right. Okay. So this is what we want to look at right now for the first quarter of 2023. Remember, all of the earnings that we've been getting has been from last year. And remember, for those of you that's been following the page, I said that I am looking for Q1 earnings of 2023. Okay. Because that is the data that I want to know. Last year is gone. I want to know what's happening this quarter, right? So for the first quarter of 2023, 42 companies in the S&P 500 has issued negative earnings guidance. Negative, right? And so that's not good, all right? And so this is what we have to keep our eye on as we trade the market that we're in. Now, there's things happening that are just insane. Tesla is up 100%. It is, the Tesla's Model Y is the number one selling automobile, period, of all manufacturers in California. So that's helping to give it a pop, right? So you have these things that are popping off, but there's these underlying major things that's going on. We still have a 2 and a 10-year yield inversion, which 100% of the times after that happens, within 12 to 18 months, we are in a recession. So the macro things that are happening are still there. So that's why I've been literally screaming from the mountaintops, stop loss, stop loss, stop loss. They don't work 100% of the times, but it's just one of the tools in your toolbox that you want to watch. Now, let's talk about how we could find a deal or how we can find something that we could trade short term. So there was not a lot that was going on where I saw a lot of opportunity, but I do have my eye on ticker symbol BIDU again, right? So I'm looking to re-enter into Baidu. See here? And out of all of these, I am keeping my eye on Baidu. And you say, why Baidu? Because of all of the talk about Chat GPT. That's why. Because they have their version that is coming along also, all right? And so there's a couple of things that's happening. I listened to the president's full speech last night, and I was waiting to see how he related to the balloon in China. He mentioned China a couple of times, but he never mentioned the balloon, right? So we look for opportunity. He never mentioned the balloon because he's walking this tight line where he could, so America can keep a working relationship with China, right? It's like, it's like the in-laws, you're being nice because you have to, because that's your wife's parents, but you really don't like them, that type of deal. I don't know about that. I'm blessed. I love my in-laws. I struck gold. But you guys know what I'm talking about. Some of the times, some of the people you work with, you're cordial with, but you don't trust them. That's the way America and China is. So I'm looking at Baidu because in this race to AI or GPT, and everybody is getting their own version, right? We got Microsoft, then we got Google coming out with theirs. Apple will be coming out with theirs. But just remember, in my psychology trading, just remember, there's 330 million, around 333 million of us here in the United States. How many people are in China? 1.4 billion. So there's 4 times the amount of people in China, right? We don't get into the politics. We look at where we can make money. So I think that Baidu will run back up to 160. Right? But let me show you guys the simplicity of it, right? So just 5 days ago, it was at 154, right? Look at here. Here's your 160. And that was February 7th. Is it likely to hit 160 again? I would think so. We had this big jump up, 160 again. I would think so, right? And you go, Larry, that's not a chart. I know. I just look at this for a reference, right? I just look at this for a reference. I'm telling you, I've made a lot of money doing this before I do any deep charting, okay? And this is just a basic way. So now, I have not entered into a position because I believe that it could come down to 146-ish. That's what I believe. I believe that it could come down into 146. So I'm going to put a challenge out to Stocks with Josh. I want him to tell us where he see a buy signal for Baidu, right? Put that together with my psychology trading, seeing what happened, seeing what's not being said, and seeing how this relationship is. And I will tell you this, every time there's negative news with China, I make money every time. Actually, negative news for China, if you're trading any of these Chinese ADRs, I make money on them every time. So that's why I beg you guys not to get into the politics, okay, of it all. Let's see how we can make money.
The Chinese have been downplaying President Biden's critical remarks. The foreign ministry today called on the U.S. to be objective and rational, they say, while arguing that a responsible country would see this relationship as one of opportunity. Now, there's been some speculation that the Chinese may be reluctant to be seen as personally attacking President Biden because of his relationship with President Xi.
What are you seeing and sensing about the vitality, the reopening, the economic activity in Beijing and elsewhere in China?
Well, based on my impressions, first impressions, and after just coming back recently to China, there is definitely more economic activity compared to the zero COVID period. I have seen traffic jams, which I have not seen in the past couple of months before I left. And also there are restaurants that are open late, stores that are staying open as well. So people are out there shopping. There is still a concern about catching COVID, though not as bad, from what I understand, here in Beijing as compared to a couple of months ago when there was a massive surge. So that has subsided here. Very difficult to say what's going on around the country where the pandemic is still going on and we don't have a whole lot of clear data. But at the same time, what's interesting, I think, is that there has been a lot of discussion about economic recovery, but there's also a lot of discussion about the years of lost income from zero COVID. So that's affecting spending, and I think it's being borne out in some of the numbers that we're seeing. You mentioned the Lunar New Year. The travel numbers looked pretty good. The government said that it was about 90% of pre-pandemic levels.
So as you could see, they're walking a tight line. They're trying to be cordial while we know everything that's going on. every country has surveillance on every other country. It's just this game that we play, and we have to make sure that our borders and shores are protected from the enemy. And so does other countries have the same right to make sure that theirs are. Let's go to one of the things that she said about travel. She said travel was pretty good, but the Lunar New Year is over. And so here's another play that we're just going to keep an eye on. I'm not currently into any of these plays. I took my money and ran, but this is a Chinese travel company here. We're not going to go deep down into it, but they do handle travel, hotels, flights, car rentals, all of this stuff, trip.com. Okay. And as you could see, it has cooled off. The question is, will it return to $40? It's at $37. Will it return to $40? Now, for those of you that know about options and price action, like from 146, say in Baidu, if it goes down to 146 and we get it, and we go up to 160, that is a lot of potential money to be made with options, okay? And you could also make some good money actually with just the stock itself, but you really kill it with options. So these are two that I'm just keeping my eye on. I will let you guys know, but I probably will be entering into Baidu, and then maybe TCOM, trip.com right now. And then if I see any other plays, we'll go from there. But I put a challenge out to my brother Stocks with Josh on Baidu, and hopefully you guys go over there and let him know I put a challenge to him. We're just going to run a little experiment, see what he does on the chart, because he is the chart master. I find him, I get in, I get out. And so now let's see what happens if we put the two together, like superheroes. I got to get my superhero name. All right, good people, I'm just playing.
Julia.
Disney beating on the top and bottom line. That better than expected performance driven by results of the parks division and smaller than anticipated losses in the direct-to-consumer streaming division. Take a look at shares now up about 3%. Now, revenues of $23.5 billion, that grew 8% and beat expectations of revenue of $23.4 billion. Earnings coming in adjusted at 99 cents per share, beating estimates of 78 cents per share. Disney Plus subscribers nearly 1 million higher than anticipated at almost 162 million, with that core Disney Plus subscriber base, as excluding Hotstar, up 1%. Total direct-to-consumer subscribers also falling less than anticipated to about 235 million. Now, losses at the direct-to-consumer division of about $1 billion was less than anticipated, and also down from losses of $1.5 billion in the year earlier quarter. Now, the key thing driving the results, revenues increased 21% at the parks, experiences, and products division, while operating income at that division increased 25%, with particular strength in higher volumes as well as increased guest spending at the domestic parks. CEO Bob Iger saying in his quote at the top of the press release here, quote, "We are embarking on a significant transformation. We believe the work we are doing to reshape our company around creativity while reducing expenses will lead to sustained growth and profitability for our streaming business, better position us." And then, of course, Scott, I have to say, he talked about improving profitability. I'm sure he's going to be asked about that restructuring and cost cutting on the earnings call, which starts at 4:30 Eastern.
You know what, Julia, really quick, because I see this other quote, and I want your opinion on it because you know this so well. We're working to reshape the company around creativity. To me, that sounds like a shot across the bow at Bob Chapek, that one of the things that Iger talked about when he came back was putting decision-making back in the control of the creative,
100%,
the lifeblood, the heartbeat of this company. That, to me, is not lost at all on that statement.
Absolutely. And look, he had already taken steps to undo some of the restructuring that Bob Chapek did. Bob Chapek separating the creative decision-making from the distribution decision-making and having those be run separately. Iger already took steps to reintegrate those, and clearly here is talking about doing more to reintegrate those different parts of the business and try to make sure that they're profitable in all of their decision-making as they do that. Of course, there's a lot of concern about the high cost costs around the direct-to-consumer Disney Plus streaming business, which we saw the costs were not quite as bad as anticipated. But yes, this is very clear. Bob Iger has made it clear from day one that he really wants to prioritize the creative content and those decision makers when it comes to figuring out where to put the films, where to put the TV shows, et cetera.
So as you heard, Bob Iger is back, and Bob Iger was a good CEO, and Bob Chapek wasn't. So Chapek is gone. He actually did a horrible job, if you ask me. Iger is back, so Disney is doing well. I expected Disney to do well. Open borders now. They have, just remember, places like Las Vegas, places like Disney. They didn't have that international travel. A great deal of that travel comes from China. Now that China has opened up, these places are getting flooded, bringing in money and all of that. And so Disney and Vegas are both profiting from China being open. Call it what you will, good people. These markets are just so intertwined. It really is. So, but I expect that Disney will probably, within the next day or two, start to really cool off. I believe in the next 24 hours, we'll probably have a slight bump up on Thursday, but I believe it's going to cool off. I just do. Everything is a little frothy right now, and it's very scary. I'll just be honest with you guys. It's very scary. I'm not chasing any of these plays right now. I'm just getting in and getting out, okay? Because I'm just fearful of I'm just going to say it. I'm just fearful for what's lurking around the corner, all right? We're going to leave it right there. Live, love, laugh, and learn. See you later. Hey, I will see you guys. You remember, today is Webull Wednesday. All of the trades that you see me do, all of these option trades that you see me do, I did them all with the Webull app. Okay, deposit a penny and you're going to get 12 free stock. And let's go from there. All right. We will see you tomorrow. Live, love, laugh, learn, and earn.